The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. And once more, we're into the breach, dear friends.
The following takes place between 2 p.m. and 3 p.m.
Every day, folks, every day. We're printing off a 2,100 on the S&P cash, almost 2,101, 2.5 billion shares. So it looks like we are in a new stage of the market where, we've got about maybe 400 million more shares on the New York consolidated tape as we start the show. So it certainly looks like more volume is coming in, either up or down. We got to 2090 as a low today, and the market started pushing up a little bit. We've got a Fed talker out there blabbing and blabbing and blabbing. That's my new Fed update. Anyway, they keep talking and talking and talking. It looks to me, as looking at the earnings after the bell, of course, I think we've got Disney. But there isn't much more to move this market. We had 150 some odd stocks last week through the S&P 500. So pretty much down to the last stragglers. I don't think there's a lot of stocks that would move the market. Don't think Disney's going to move anything other than maybe the Dow. And even that one's kind of a hard one to get a look at. A lot of people sold it off on last earnings. It was last earnings on the discussion of cord cutters. Yeah, it was last earnings. But it is a little bit troublesome, mostly if you are long. I'm not going to short Disney. I would never mess with the mouse. But it is somewhat troubling, I think, because we're starting to hear maybe some dissent about the Star Wars movies maybe not being all that great. Apparently, they're going to have lots of wonderful effects. But I'm starting to hear, this isn't going to be like the first three Star Wars films in the 70s and early 80s, that maybe between the really horrible last three and this one. So maybe they're better than the other ones. But a lot of people were projecting over $1 billion in sales for this first movie. And at least the word in Hollywood, Variety magazine, starting to come out that maybe it might not be as good as people thought. Anyway, a little tough to figure out. We'll see how volume is out here, but we're kind of at this new volume level, and I don't exactly know why. I have a couple of theories. I'm going to work on it over the coming weeks, and that is that the high-frequency traders have really made a comeback since the real big movement down in September, that either they found something or the market just agrees with high-frequency traders, but I'm seeing a great deal more volume in ETFs and indexes than would ever be implied by the volume of the individual stocks themselves. That generally means some kind of asymmetrical movement in the stock. That means that it's just buzzing around. It's got no real, direction. It is just randomly moving up and moving down, which is a real feature of high-frequency trading. They're just always trying to move the thing up or move it down. I think we can make a fairly decent case that the market could have made a long-term high over the last couple of days. And by that, I mean, we're not probably going to lose 500 points before the end of the year or anything like that. But I think we could probably lose 50, 70, 80 points in the S&P cash before Thanksgiving. And see that kind of we kind of drift off that way, maybe even into the end of the year. So I have a feeling that maybe the money to be made in the equity markets, at least, it may be, in the next 15, 14 days. And after that, it's certainly starting to look like the market may be a very quiet December with all the noise and thunder, um, in this month. And, we've got, as we look forward, I think it's the 17th of December is the meeting date. And at that point, traders have pretty much left. If you were probably going to drop something on the market, probably a good time to let everybody go away for Christmas. Most of the volume will be out of the market by that date. In fact, let's take a look at it. The 17th and it was 17th and 18th. So maybe that 18th. Oh, need to get to December. Okay, yeah. So this 17th of December is a Thursday. So you're pretty much out. I mean, you've got 1 day of volume after that, which is the 18th. And then that's it. So if they choose to raise on the 17th, you got 1 day of volume, and then you go into Christmas week. And that's traditionally half the volume of the week before that. So, I could see that they could get this market ready for everything, move it down a bit into Thanksgiving, and watch it go sideways, maybe all the way into the 18th with a lot of will she, won't she, do they have a spine, could they ever raise rates? But they're certainly talking it up like they're going to do it, and it certainly looks from both the dollar index, the way gold and silver are moving, to everything else that certainly I could easily see that we're over 100 on the dollar index into Thanksgiving. Already putting a hurt in a get along, if you know that country saying. Just the idea that they're shortly going to move this thing up. To me, the overhang is probably going to be worse than them actually doing something. So I could see us kind of meander down in there, maybe have a bad day on the 18th. They prop this market up for the weeks into it and into the first of the year. But I'm thinking that I might be 100% short come the day after New Year's, the first trading day after New Year's, come back and see that. But I think maybe we've got a little downside between now and the end of the year, and maybe that leads us in. And I don't think it would be that much different than 1999 going into 2000, other than we don't have the same tax implications that would really make people think that it was time to either start buying or selling. So I'm not saying the magnitude of the move into 2000 would be the same, but I think that we've got a lot of people sitting on the fence, and it may be clearer that a high is in, and maybe we get 200 or 300 points down on the Dow, on the S&P before we really get started. Speaking of getting started, we need to get this program started. I've been incredibly late getting this episode out of the blocks, but here we go.
That it's all just a little bit of history repeating.
This has been a market, we're in 7 years, that has had a judiciary looking toward antitrust extremely quiet for the last 6-7 years. This has not been an administration that's gone out of its way to figure out ways of telling people that they've got a monopoly, although I think there's a handful of them that are. Generally, even if you are a monopoly, as long as you don't act obnoxious about it, they'll let you get away from it. And so far, haven't seen a lot of people being truly obnoxious about it. On this day in 1999, Judge Thomas Penfield Jackson finds that Microsoft is a monopoly. Kind of interesting, the stock lost more than $10 billion. And this is in 1999, folks. That's when, long before the markets were this big. It cost more than $10 billion worth of Microsoft shares are traded. Stock dropped as low as $84.37. Oh, that's back when they were using teenies and eights and all that stuff. But that was an 8.5% loss, one of the biggest loss ever before it recovers on the day to close at $89. I remember that day fairly well. Less than 2 years later, though, the federal appeals court overturns much of the judge's ruling, but did leave in place a monitoring outfit to always be looking over the shoulder of Microsoft to make sure that they didn't continue to push the Microsoft browser to the extent of all others. And that pretty much also had two major causes. The first was in, of course, the 1992 election. We had the Clinton 1. I don't know what they're going to call Clinton 2 if we get a Clinton 2. But the first Clinton, Bill Clinton administration started in 1992. But what we saw in the 1996 election was a huge amount of the criminal class of Chicago coming in to Washington, D.C., and they really put the hurt on a lot of tech companies, seeing the huge amounts of cash there and wanting it. The political class quickly went over and said the equivalent of, it would be a really bad thing, sir, if someone was to come by and throw garbage cans through your windows at night. Now, if you paid me just a few bucks, it wouldn't happen. And the protection racket that had been incredibly quiet, except for other things like waste dumps and nuclear waste facilities and other things that nobody in the world would love except a politician who was getting paid off by other people, started seeing these as cash cows and getting involved. In fact, Bill Gates says his biggest mistake was ignoring the politicians and not just paying them off. And he figured that if he would have paid them off, they never would have seen this. But after he wouldn't cough up any dough or even speak to them, they pretty much started coming out after him in earnest after the 96 election, wherein he told them to go pound salt. Since then, the biggest tech companies, in fact, the biggest lobbyist in Washington, D.C. for the last 2 years has been Google. And they're buying as much protection as they can. Kind of sad to see, but I guess eventually you are no different than the others, and that is if a politician sees you with two dimes to rub together, those two dimes should be his. But a little bit of more than just, it's not just the law. It has a lot to do with whether or not you pay off the current people in power, and it's happened on both sides. But sad nonetheless, let me put it that way, that it has come to this. Of course, we had our last speaker from the Fed come out at about 1:30. Just saw the market kind of drift down a little bit, but I don't know if there's anything new out of this. People are going to probably mull over what everybody said in the last 2 days. I think we get at least some kind of indication in the next day or two that the market is pricing in a rate hike on the 17th of December. We'll be back in a minute.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crisp crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And we're back. Market's kind of a little vacillation out here. I continue to think that we're probably going to have a low volume, or not a low volume, but a low speed retracement into Thanksgiving now. And that is from experience, the options, and just general market conditions. And we'll start talking about some other stocks out here. We have talked about, there was actually somebody in the den asked something out here. It was Disney. Let's get to Disney, and then I'll do FireEye. Got a lot of requests out here. First of all, somebody said, well, what would you think of Disney? And the chart looks absolutely horrific. And if you can put together ESPN, maybe not as doing as well, along with maybe Buffalo Wild Wings and the pizza joints, do you think maybe we finally grown up and the kids are off on soccer games now, and maybe the dads aren't sitting at home watching as many football games, and maybe we're not seeing that much ESPN, and we're all off in that little sissified soccer games where, of course, nobody wins and they don't keep points, and no one gets to actually touch anybody else. We're gonna raise an entire country of wimps, I suspect. Anyway. On that wimp theme, this is, the one thing, if you are long, support comes in about 107. There's pretty good picture of this on the chart right now, which brings you in about the high 106s down to 105.05. So you got a pretty good confluence level. So you got about $12 down. But if I didn't say earnings were tonight, I'd say you could short Disney. I just won't ever do it. The problem is that everybody will just say, yeah, but Cinderella's coming out next year in 4D and Smellorama and Feelorama and everything else and quad 70 millimeter. And that would be it. I hate to go up against a monopoly, and Disney is a monopoly of that. Quadrophenia, Cinerama, Smellorama, and that's it. I just wouldn't do it, but I have to admit the chart looks horrible, and I think you can start putting together a few of these things as pizza joints are not doing well, Buffalo Wild Wings not doing well, the traditional accoutrements surrounding the football season not doing that well. And I don't know what else you could say about that. Would I suspect they go higher? Don't. Like I said, I'm already starting to hear noises about the Star Wars movies not doing well, but that, of course, means that you're going to have to wait until December to see that. So that's what I'm thinking. Maybe if this thing's going to be weak, maybe it's weak as soon as those movies come out and everybody figures out maybe they aren't what everybody thought they were supposed to be. The guy that's making this movie is J.J. Abrams, who's a pretty good filmmaker. He's no Spielberg, though. He's good at putting together. I saw the last two movies he did for Star Trek, and were they great? No, they were good, and I enjoyed them. But would I see him a second time? The answer is no. And I think everybody says that they've watched Star Wars movies, probably the first three, probably at least the first one. What, did they watch it 5-10 times? Everybody I've known seen it many times. And I think once on these last Star Trek movies were good enough. So maybe there's more there. I just suspect that maybe there's just a little bit too much Hollywood influence in this one to ruin a good movie. Maybe just a few other things. I mean, hopefully they've got the script down right. I can remember sitting down in theater and watching Star Wars for the first time. I'd just gotten off a plane. My entire family was watching my brother, running around with my brother during his college graduation. And I came back to the city all by myself, house empty, and I was home about 2 hours and went and saw the movie. And I can remember going to the biggest theater in town, 70 millimeter screen, and seeing it. And if you remember how the movie starts, literally you start off in a big battle scene. It wasn't Jaws that started off with an hour before you saw the shark. It was nothing but nonstop action. Yeah. Anyway, good memories. Hopefully they don't ruin it for us. Hopefully the movie's good. But like I said, maybe $10 down. I think you could see this thing at 106 or 107 tomorrow. I just don't see enough in it to get me interested. I need to see that this thing could go to 90 or 85 before I'd be interested. You can always give me a call at 877-927-6648.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're looking for a great opportunity to diversify your financial portfolio and hedge against the falling stock market, consider the new Market Safe Metals Hedge CD from Everbank. This 5-year indexed U.S. dollar-denominated CD gives you exposure to metals with gold and silver components and allows you to hedge against falling equities with a short component on the SPY ETF. You can earn up to 45% capped upside payment at maturity if gold and silver increase in value and the SPY ETF decreases across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Don't let fallen markets get you down. Get the Metals Hedge CD. The November 12th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This is sponsored content. Everbank is a member FDIC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And in another round of I Told You Thusly, where's that at? I'm shocked. Nothing. Where is it? I'm shocked. No, I'm not shocked. What is it at here? I gotta sneeze. I'm back. Anyway, in another round of I Informed You Thusly.
I informed you thusly.
We talked about FireEye over the last month, and I had a kind of a working theory that this was much like the CCTV business, and until somebody actually forced people, businesses, to be accountable for being hacked, that nothing would change. Well, kind of getting that same vibe out of the earnings call last night from FireEye, and that is that if they won't force us to buy it, then we're not going to spend the money. We'll just blame the hackers when they come in and say, I have a feeling that there's a big difference, and I probably didn't enumerate it before, but the idea was that you're, a gas station, you got a clerk there. If the clerk gets killed in an armed robbery, then you get sued. If you're the CEO of one of the big companies that get hacked, there's no dead body laying around. Maybe there's some people complaining. It goes into a lawsuit. The lawsuit takes 5-10 years. You don't care. You just delay and obfuscate and go on. And I said that maybe the deal was it would have to be a physical law to change the habits of these CEOs, especially these major guys that you read all the time, that once we've been hacked once again. And I think I'm still on that. And listening to the earnings call, things are getting better at FireEye. They're just not getting better fast enough for investors who are losing a huge amount of interest in any stock that is not making money. Probably also a good indication that the market has topped, and that the people that have been promised pie in the sky are now thinking of it. I like FireEye. It's got a good product. I am not going to confuse the stock price, though, with a product that I like and a company that I like. The stock, I don't. There's occasionally places where you can make some good money in FireEye. Kind of interesting to see so many articles coming out this morning from would-be investors on places like Seeking Alpha, telling everybody how the low is in today and you should have bought it at the open. I mean, it just smacks of, and maybe Andy, what today's? Today's Thursday, right? So Andy Heck's going to come on today. Andy Heck was going to try to help me get a couple articles published on Seeking Alpha. And I wrote one about the whole 3D industry and what was going to have to happen for them to turn themselves around. And of course, they weren't interested in it in the least. They want a bunch of stuff that probably wouldn't help traders at all, and didn't like my article. So it seems. But I continue to see the same kind of weak and mindless thinking by some masses out here that always want to catch a falling knife. And like I said, it's probably going to take some act of Congress out here to really change things a great deal. And FireEye or 3D printers, I don't know. I guess that's why we're here at TFNN. You get to hear my opinions unfiltered, uncensored. That's me. It's Dave Unplugged. Andy has a can. Oh, Andy says rant, baby, rant. So we'll do that. He is, of course, on at the 5 o'clock hour today. And I've been trying to get him to write an article. I think he is. I got kind of a discombobulated email last night, but I had a big suggestion on what I would like him to write about this weekend. Maybe he'll talk about it tonight. Anyway, FireEye is one. Of course, we talked about Disney. There is a legion of other stocks that are both up and down. I did want to get to Facebook, though. I would not be surprised to see Facebook give a great deal, if not all, of this back in the next day or two. The reason why is that when you really look at Facebook, and I looked at the earnings last night, what we have and what we know we have about Facebook is that they're spending a huge amount of money in R&D that they've never spent before. We only got about 1 month, maybe 5 weeks of all those people they've just hired in to the quarter. But the next quarter, and if you dig through the notes in the earnings, you're going to find out that these guys are suddenly going to start having some really big CapEx for all the other stuff. Now, 2 years down the line, is that all going to be worth it? The answer is yes, but we know that the stock market is a very short-sighted market. And when we look into the next quarter, my guess is we're going to see a lot of that CapEx, 3 whole months of it, and it's going to change completely the outlook of Facebook. It kind of looks like money just comes in one side of the building and goes right into the stock price on the other at the moment. But we're really going to see a lot of changes in the things that they're working on in the near future. Those things are going to have some fairly expensive startup costs. And in those, my guess is we may have a year of Facebook. I could see this thing closing lower tomorrow or even gapping down lower. and seeing us give back all of the gains today. One, the revenues should have been well of an advanced of what they were. I looked at the whisper numbers that everybody was talking about on the street. They were far in excess on the revenue numbers than Facebook delivered. But again, this is not a market that anybody wants to hear any naysayers like me. And of course, all I do is say nay, nay, nay. Anyway, we got a lot of stocks to look at here, and we'll get right into them. Nope, nay, nigh. No, nigh is the end of the year. The end is coming. The nigh is coming. Anyway, we will get on to bigger and better things. We've talked a little bit about A.O. Smith. I've been watching this company for a few days and just wondering if this thing is going to give us a signal. Of course, there's probably not a better stock out here to let us know what's happening in housing. We've got about 4 or 5 days now where A.O. Smith has just gone sideways up here at the top with no volume. Today is another day up here with, 436,000 shares. I would be getting very nervous if I was long out here. Of course, we've been going into this July 23rd high, 1.9 million shares. And what did we see out here today? 436,000 shares. Man, talk about rarefied air. There certainly is a lot of it in a lot of these stocks. One of the other rarefied stock companies has been Salesforce. I've called it the most dangerous stock in the market because if this one fails, I suspect everything is going to fail rather quickly. But this thing has come up to its previous high, which is the April 29th high, $78.46. It's been going into this. A lot of people are going, well, they're growing like a weed. Yeah, but they also have a price earnings multiple that's about, 45 or something, 42 or 45. Depends on which set of books you look at. This is one of these stocks that, you can be very liberal or conservative when you look at the way that they do their books. Most people on Wall Street, of course, look at this as a huge cash cow. It's going to be a big company. Question is just whether or not it's overshot its ability to deliver earnings over the next couple of years. My guess is that the easy money in Salesforce is over. I would not be surprised to see a hiccup or two as we go into the future. But right now we're at 28 million shares from the April 29th low that spiked up here. We got into it with 4.3 million shares. Okay, I'm going to do this again for those folks in Lutz, Florida. 28 million shares on one day. We got 4 million shares. We've gone above that high. We've pulled back down. There hasn't been a lot of volume yet. It's not a horrible company, and even the chart's not bad, but the energy from the first move, December 9th, to the spike on that April 29th, compared to the move from August 24th up to this high now, is it's off maybe about 20, 25%, something like that, for the energy on my Power Law Vector Indicator number. Does that mean that this stock couldn't go a little higher? It's the darling of it's the last real darling of Wall Street. Let me put it that way. From the last 2 years, it's just hard for me to see this thing as not maybe a little bit ahead of itself at this time. So keep a close eye on that. Some of the other stocks that we're looking at here that are hanging out on highs with no volume is Delta Airlines. We get into the January 23rd high at $51.06. We've gone above it. We've closed below it. The 16 million shares got tested by 11 million shares, and we're back into the trading range. Now, the biggest thing is that you had this huge move up from October 13, 2014 to the high on January 23rd, 2015. We've come back up and tested it. The energy is less, but of course the dollar range is less. But even then, it's not like a whole lot more energy came in off that August 24th low. It's okay. I probably wouldn't be shorting it, but there's a lot more stocks like this that give me pause than give me a belief that the tops are just going to get taken out. Red Hat is another one. Of course, yesterday I didn't talk about it, but Microsoft is getting involved with Red Hat. Let's see what I hear. And they're pairing up it's a little confusing on how this thing's going to actually work. I'm going to be going through more documents on it tonight. But that kind of was the move yesterday. That move, of course, had 2 million shares, but unfortunately, that was 2 million shares going into 4.6 million shares from the June 19th high. The energy is good in this last leg. It's not bad, so I wouldn't be shorting the stock. But I do suspect that we've got a lot of these stocks that are up at these highs, and we're not really pushing a lot of them out here with any kind of volume. Other stocks that make me pause, besides hating cell phone providers and internet providers, as I went off on them yesterday, Verizon, it's another one of these stocks that's kind of back up to this resistance level. September 15th, we saw 21 million shares at $46.55. Went above it the last few days, but volume at the peak was 14 million compared to that 21 million shares, and we pulled back into this trading range. Again, volume is very light, but again, we're hanging up at these highs. Normally, if you figure that I am right and we've hit a top in this market, then what you will see is about 1 or 2, normally 3 days, where the volume remains light. But today will be a light volume on the way down. Then you'll start picking up maybe a little bit more volume tomorrow. Even on a Friday, you see, the volume's picked up a little on maybe a stock like this. And then you'll see come back in Monday, or you come in at Tuesday, and you'll see a little gap down in the volume really starting to pick up. And then maybe kind of a tick, 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 drip, drip, drip down into Thanksgiving. But at least that is what I'm speculating on now. Groupon. Yep, that's another one. GPRN. The problem with Groupon, GPRN. The problem with all these, am I not got it right? GRPN. There we go. I haven't been short. You haven't been. I don't think you can short the stock. Even when it was at $30, this was another stock that was just like, which one I'm thinking of? GoPro. GoPro at the high, when it was $93, I checked it. And the premium to get the shares short, i.e. the cash you had to put up to get the shares short at $93 was $17. So literally, you had to, you were basically had to see the stock, what, 17, 13, $86, no, $76 was break even when it was at $93. And the same thing with Groupon. These folks were shorting this thing when it came out the door. And I suspect a lot of the original people surrounding this stock have been short forever. And again, yeah, this thing's going out of business anytime soon, but you don't know what that is. Nay is for horses. Okay. Trading out at 2097, 2.8 billion shares. So again, we're going to see what happens over the next few days. But I'm not expecting a lot of Roman candles and fireworks. I'm expecting the drip, 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 drip that happens kind of like a paper cut, where you just every day you come in and you get 5-10 points off or something like that, and eventually see it. Now, we may get a little bit more action on the first couple of days as we break some of these levels, but I don't see a lot of stuff out here that tells me that the wheels just all fall off at once. Maybe I'm wrong on that, but maybe we have kind of a nice little downtrend all the way into Thanksgiving. At least that's what I see in the charts at the moment. Give me a call, 877-927-6648. Email me at pat@tfnn.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry, powered by the acclaimed with TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we're back. Got a scant few 4 minutes left in my show. Of course, then we're going to have Tom O'Brien for the next 2 hours, and then Andy Heck. It'd be interesting to get his take on how natural gas responded to what looked to me a pretty big build. And maybe there's cold weather coming. I didn't have a lot of chance to look at it today, but maybe we found at least a temporary low in UNG, some of those others, but we will find out, I guess, later. I'm sure they'll discuss it in the next hour with Tom O'Brien. But I have, of course, diverged from the show. Look at a few other stocks. Anyway, we were looking at some other things, but Qualcomm dropped the chalupa, and it's lower today. Had some comments about the SOX. Looked like it had a real problem. I mean, Qualcomm's blowing through the lows, so you can take a look at that. SOX itself looks like It may have taken one more dip than it should. Did I have it right? There we go. I've been rather bearish on the stocks here for a little while. I think the proof of the pudding is probably going to come after the bell. We're going to have Skyworks Solutions, which is going to be a deep view into Apple. We've had one that you could kind of give a mulligan to Apple on long-term sales of the iPhone. You had one that you couldn't give a mulligan to and was kind of bearish on Apple. And then, of course, tonight. Now, Skyworks is probably the most correlated stock to Apple. But at this point, I don't think anybody even wants to listen to whether or not Apple's doing well or not. But I have a feeling that the stocks will react a great deal more to Skyworks Solutions than the rest of them. It doesn't look good to me. When you really look at the stocks out here and the retracements, this thing basically did 618, came up here. You can make a pretty good indication or argument that this thing has failed that move. Let's get this a little bit closer so you can see. Let me zoom in here a little bit. Did the 618. It's closed back a bit. There wasn't a lot of energy out there that kind of pushed this thing up again. You got kind of a nice candle coming back here. If you get any follow through tomorrow, I think we could really start seeing some movement. Unfortunately, I think it would be more of a bet than a good speculation on Skyworks. But I think we're going to get the signal tomorrow, and that may open up some trades somewhere else in the stocks itself. But yes, I thought maybe this thing was going to try to get up to this gap down that happened on, June 29th. The high of that day was 93.83. And if I'm wrong, that's probably where it's going. But I just don't see a lot of juice. In fact, you can make a case that this is in a baby ABC down. It could probably take you down to about $86 and maybe $87, something like that. And other than that, I don't know if there's a whole lot. I'll be waiting for the earnings as everybody else. We'll be looking forward to the one and only Tom O'Brien and my brother from another mother, Mr. Andy Heck, in the 5 o'clock hour. And we'll be seeing you tomorrow. Same bat channel, same bat time. And as always, said it in my newsletter this morning, always give you a warning as we leave this show. And that warning is to sell when you can, not when you have to. The reason why is I've seen so many people sit on big, fat wins only to give all the cash back. At least put in a stop. Things could get very dicey very quick. Just a word of warning. Just put stop. That's all. See you tomorrow.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.